Welcome back to my channel. Today we'll be doing current assets versus current liabilities. Let us begin. So current assets represent assets of a company that are expected to be sold, consumed, used, exhausted, whatever, in standard business operations within a year's time. So current assets appear on balance sheet of a company. It is required to be shown on the balance sheet and in each year. Current assets would include cash equivalents, cash, accounts receivable, stock inventory, marketable securities, prepaid liabilities, and also liquid assets. Current assets may also be used. Sorry, current assets may also be called as current accounts. So basically, current assets are all the assets of company that are expected to be sold or used as a result of standard business operation over the next year. Okay. Current assets include cash, cash equivalents, account receivables, prepaid liabilities, and over liquid and other liquid assets. Current liabilities are important to a business because they can be used to fund day-to-day business operations and pay for the ongoing operation expenses, right? Current assets are important to a business because they can be used to fund a day-to-day business operation and pay the ongoing operation expense, which means since the term is reported as dollar value, all the assets and resources that can be easily converted to cash in a short period is represented as company's liquid assets. Okay, also current assets. However, uh, care should be taken to include only qualifying assets that are capable for being liquidified at a fair price over the next one period. For instance, there is a strong likelihood that many commonly used FMCG goods, the fast moving consumer goods, produced by a company can be easily sold over next year. Inventory is included in the current assets, but it may be difficult to sell land or the heavy machineries. So these are excluded from current assets. Depending on the nature of the business and the products it has in markets, current assets can range from a barrel of crude oil, fabricated goods, or work in progress inventory, raw materials, or many such things. So this is what basically current asset is. What is current liability? Coming to the current liability, current liabilities are a company's short-term financial obligation that are due in 1 year or within a operating cycle. So operating cycle I also mentioned in my working capital. I made a video on working capital. In that I had explained this in depth, but I'll again do it over here. Operating cycle is also referred as a cash conversion cycle. It is the time that a company takes to purchase the inventory, convert into cash, and cash from the sales. An example of current liability is money owed to suppliers in form of accounts payable. Accounts receivable come in current assets, but account payables are in current liabilities. Current liabilities are typically settled using current assets, which are assets that are used up within 1 year. Okay, the current assets include cash or account receivables, which is money owned by the customer or sales, right? The ratio of current assets to current liabilities is an important one, determining company's ongoing ability to pay its debt as they are due. Account payable is typically one of the largest current liabilities in an company's financial statement, and it represents unpaid supplier invoices. Companies try to patch their payment dates so that their account receivables are collected before the account payables from the due suppliers. So basically what comes in current liabilities is account payable. short-term debt such as bank loan or commercial paper issued, uh, then dividends payable, um, notes payable, the principal portion of outstanding debt, okay, the current portion of the deferred revenue such as prepayments by customers for work not completed or earned yet, current maturities of long-term debt, okay, interest payables, outstanding debt, including long-term obligations, income taxes owed within the year. So I have this is a sample of current of a, so in a balance sheet there is current assets, current liabilities, long term assets and long term liabilities. So what all this include, again I will run through it. Current assets are cash on hand or in the banks. Not necessary you need to have them, but you can remove it. Accounts receivable that we are going to get from our customers, the money that we are going. Notes receivable from trade, inventory, marketable securities and other assets come in current assets. Current liabilities is payable banks pay, so some debt that has been taken, or account payable current, account payable past due, past, in past you have taken loan but in this year you have to pay this. Accrued of state income taxes, other expenses. So basically the money that you have or you will get in this year come in assets, and the money that you have to pay to XYZ people current come in current liabilities. I will take an example. This is a balance sheet of company A and company B. These are the assets, the cash and the cash equivalents, inventory, and account receivables coming to a total of 100,000. Company B also the number is different but is same. For account for company A, the total current liabilities is 125, and also for company B, current ratio is current liabilities, a ratio between current assets and current liabilities. Okay, and yeah, if you see your, I will link that working capital video in this I button over here. But I had in the last video told how to calculate working capital. Working capital is basically current assets minus so current assets minus current liabilities. Okay, so if you notice in this, if you minus this from this, like if you minus current liabilities from current assets, so it comes in negative, which is not good for any company. The It should not be in negative, eh, because if the company doesn't has money for its day-to-day activities, uh, so you need to have money today also. Only money in long term, if you have long term assets, you cannot liquidify it immediately and do the current expenses of this business. So current assets are also equally important. Thank you.